On June the 14th, 15th and 16th, we get some big central banks meeting on interest rates, the Fed, the Bank of England and the Bank of Japan. Marc Ostwald joins us now from ADM Investor Services with a look ahead. As near as we can be certain, I think the Fed is expected to raise interest rates by a quarter point next Wednesday. Is that something that you got priced in?
Yes, 100%, and the market's basically got it heavily discounted. The issue for next week really boils down to what is going to be their signal in terms of the rest of the year. At the previous meeting, basically they were saying we're going to have in total 3 rate hikes this year. In the meantime, there are some Federal Reserve Board members who are basically worried about the drop that we've seen in inflation over the last 3 months. It's not been a precipitous drop. You know, we're still only talking about inflation dipping down to 1.5% on the core measure. But it's enough for them to be concerned that perhaps they shouldn't tighten policy too far. So they're questioning whether there would be a need to have another rate hike after next week, and markets are certainly starting to get on board with that message of them, which is an interesting one because the one thing that's been a feature of Fed policy this year, in contrast to the 2 preceding years, is there hasn't really been much divergence of view. Now there does seem to be some divergence, and so I think markets will be looking very clear for some clearer signals on that front. The other side of the equation is that those who are more dovish, like Mr. Bullard, have also intimated that as much as they're not enthusiastic about another rate hike after next week, they would like actually to see the Fed to start to wind down its balance sheet, which of course is an interesting aspect because that in theory is supposed to be also a tightening of policy and a tightening of financial conditions. However, Mr. Bullard, amongst others, has opined that he doesn't think it's actually going to have much of a market impact. I think that's highly debatable. Eminently, it's going to be very, very measured when they start doing that, because they're really going to want to test the water to see what impact it has.
Whereabouts in the market is that likely to be felt most? Is it the dollar? Is it the bond markets? Whereabouts, if we get the mopping up all this excess money in the system?
I think initially it'll probably be quite marginal, but in the longer run, it's clearly going to have a negative impact on risk assets. If markets have to take more government debt down from the United States, and the United States is still running a very large budget deficit, as opposed to the Fed actually hanging on to a lot of it, then there'll be less money to allocate to equities, to credit, and that in itself, and indeed to other risky assets like emerging market assets, be they bonds or equities. So that's where it will be felt in the longer run. In the first instance, the winding back will probably be so marginal as for people to say, well, that doesn't really make a lot of difference. And we're still in an era where interest rates are extraordinarily low the world over, and I need to generate some returns. But in the longer run, as that becomes more cumulatively effective, they'll start allocating more money to so-called safe assets.
Bank of England, of course, in the context of a hung Parliament, which was not the base case of the Conservatives going into this election campaign. When the Brexit referendum came through with its shock result, 52-48 in favour of splitting away from the EU, one of the first things the Bank of England did was cut interest rates. Could we see some sort of decision by the Bank of England next week to help us through this?
I think even though they actually claim a lot of responsibility for the better growth profile that we had in the second half of 2016, which is highly contentious, I think this time around they will have been chastened by the fact that their rather precipitous actions last year were that they've got time to sit back. It's not clear what impact this election will have. Clearly, they're already factoring in the business investment's going to be quite weak, so that's hardly news. And I think in the short term, this being not an inflation report meeting, they will want to actually probably sit on their hands, signal that they stand ready to act, and maintain what one would call an even-handed bias that they've got at the moment, that they could put rates up or put rates down, or indeed do more QE. But they'll definitely make it clear that they are ready to act. But other than that, they will see how the economy evolves.
Yeah, Bank of Japan on Friday. Bank of Japan has been trying to combat low inflation for so many years now. I can't remember now when it all started, but this seems to be something that the other Western banks are now entering this phase. But what's the Bank of Japan doing? What can it do now? What is it likely to do on Friday?
Well, I think the consensus looks for the Bank of Japan to do nothing next week. The questions which surround it are really to do with its forecast update. It is expected that they are going to cut their inflation forecasts. There may be some sort of more optimistic offset from that, insofar as they are likely to raise their growth forecast despite that downward revision to GDP, which was wholly due to a downward revision to inventories. They will continue to say that they're gradually winning the battle against inflation. I think the evidence speaks against them. And really, as with a lot of other central banks, it's not going to be down to the Bank of Japan to get the economy going. It is really down to government to make structural changes to its economy. It is really quite amazing to see unemployment down at the very, very low levels that it is in Japan, and no wage growth. And that's really where something has to give, but it'll probably have to give in the sense that governments do something to incentivize employers to pay workers more, and that will probably help in turn to raise CPI.
Okay, let's hope. Mark, thanks indeed for joining us. Marc Ostwald with a look ahead to the big central bank meetings out in the coming week.